Let's continue our discussion on the economy with David Resler, chief U.S. economist at Nomura Securities. David is one of the most accurate forecasters in 5 categories of economic data, including GDP, which makes him a Bloomberg best economist. And he joins us now from his office here in New York. David, welcome to Bottom Line. Always a pleasure to have you on.
Good to be here. One quick correction, though.
Yeah.
I have a new title. I'm Chief Economic Advisor.
Well, duly.
We have another person who's now in the role of Chief U.S. Economist, Lou Alexander.
You know what? Then I guess we can start that again. We're joined by David Resler, the Chief Economic Advisor at Nomura Securities. David, thanks.
Very good.
Stocks, they've been on the rise today. Some encouraging economic news. The Commerce Department saying the economy expanded at an annual rate of 1.3% in the second quarter, and that's up from an earlier estimate of 1%. And then the Labor Department said fewer people applied for jobless benefits last week. Does that mean that the patient still has a pulse?
Oh, I think the patient definitely has a pulse, and I think some of the markets and public sentiment has gotten a little bit too pessimistic. Some of the things that held back growth in the first half of this year are clearly receding into the background, and we're getting a little bit better performance in the third quarter than we had in the second quarter. That doesn't mean, though, that we're in a healthy economy or a strong economy. It's not, but it's not as gloomy as some people say.
Well, David, where's that pessimism coming from?
Well, I think you guys get some of the credit for it.
No doubt, yeah.
And I mean, just generally, you can't be paying attention to what's going on in the world and not be very anxious. It's kind of like, I suppose it's everybody's a little gun shy after what we went through in 2008, and you hear stories every day on the news about financial market turmoil or the crisis in Europe, and we see it manifest in our 401k every other day.
Yeah.
That makes people nervous.
I believe Spiro Agnew, the former vice president, called it nattering nabobs of negativism. Is that about right?
Yeah. Do you deserve to be called a nabob, though?
I seriously doubt it. What do we need to see on the jobs front before we can say conclusively that a downward trend in the unemployment rate has taken hold?
Oh, well, we haven't seen a conclusive downward trend in the unemployment rate. What we have seen is slightly less bad data in recent months. The unemployment rate is certainly lower than it was at the peak, but at 9.1%, that's unacceptably high, a point that Chairman Bernanke made very vigorously yesterday in Cleveland.
You say unacceptably high. Is it also paralyzingly high to the point where businesses don't know which way to turn? They don't know where to go at this point?
I think there's a lot of uncertainty in the business world right now, and that uncertainty is delaying action on the hiring front, on the business expansion front. So overall, corporations are sitting on a mountain of cash, but kind of reluctant to put it to use because they're pretty worried about the outlook.
And David, today's GDP and unemployment numbers, are they enough to ease fears that another recession is looming on the horizon? I mean, I should point out that the VIX, the so-called fear index that gauges volatility, it's on the rise, and futures on the VIX show investors expect it to remain at least 50% higher than its historical average of 2045 through next spring, through May.
Well, I think that's probably justified because we haven't resolved. There's been no resolution of the crisis in Europe. I don't think there's going to be a clear and wonderful resolution anytime soon. I think there's going to be uncertainty around whatever happens there in the next few months, and that uncertainty is going to persist. And against that backdrop of a potentially looming disaster, perhaps the fear of a disaster recedes, and if that happens, then people begin to focus more on the fundamentals of their own business.
Is that what gets lost in a scenario like this, that the ensuing chaos or perhaps even panic cloud the judgment to the point where people aren't paying attention to the fundamentals?
Yeah, I think people are looking over the shoulder all the time, and it makes them a little bit they take their eye off the ball a little bit and ignore some of the fundamentals in their own business. And I think that's happening on a broad scale, but I don't think it's leading anybody to say, okay, let's head for the hills. This disaster is coming our way, and we have to get out of its way. I don't think that's happening yet, but people are being very cautious, both businesses and consumers.
Well, speaking of cautious, are stocks too cheap right now? Given the market's turbulence, are investors more inclined than not to believe that the short-lived rallies we've been seeing are more like 2 or 3 steps forward and then 1 step back?
Well, I think it's, with so much uncertainty out there, it's kind of hard to be confident about the outlook for any financial asset right now. We're at exceptionally low interest rate levels that could go away quickly or could even go lower if things worsen. And the stock market, I think, is attempting to price in a very complex outlook.
David, if I might ask in our last minute, you spoke of the situation in Europe just a moment ago. How does that situation eventually resolve itself, and how exposed are American banks to what's going on in Greece?
I don't think the exposure of U.S. banks to Greece, the direct exposure, is all that great. The problem is that the entire world financial system is exposed in the same way that we were in 2008 through the interconnectedness of the global financial system. And a problem in Greece, if it's confined to Greece, probably won't be too damaging. But if it spreads to other parts of Europe and into the banking system, then it's a different story.
David Resler, Chief Economic Advisor, Nomura Securities, joining us from his office here in New York. David, it's always a pleasure. Thanks so much.
Great to be here, Mark.